Hi, this is Jeffrey Kerr, Kerr Financial Group. Today is January 28th, 2022. So we're going to review what's going on in the markets. Been a chilly month in the Northeast, and it's been chilly on Wall Street as well. So we'll get into that and take a look at some of the dynamics that the markets are looking at. But let's start with the beginning of the year. I think is to point out there's an interesting dynamic that takes place in investing in Wall Street, and being that on January 1, everyone starts back at zero. We all get to the starting gate and together and begin the year. That's not to say we don't own prior last year's performance, 2021, or historical performance of what you've done, but just again we all start over on January 1. Now sometimes that can mean a different direction or trend from what was going on in December, but many times it's a continuation of what was going on and what the markets were looking at in December. This year, January 4th, the second trading day of the year, the S&P 500 and Dow Jones Industrials made all-time highs, which is a continuation of 2021. In 2021, the S&P 500 made around 70 all-time highs. So it was a good year. The S&P 500 was up 27% for the year last year. The best of the four major indexes. The Russell, the small cap, was up 13%, which was the worst of the four. Dow and Nasdaq in between. And we'll attach a spreadsheet that you can look at. It has the details of the four major performances for 2021. So the record by the S&P 500 and Dow, but the other other indexes did not reach the same records. In fact, the Russell didn't. Their last record was on November 8th. And the Nasdaq Composite was on November 22. Coincidentally, the Bitcoin peak was also on November 8th, the same day as the Russell. So, the message there might be just the overall enthusiasm by investors, maybe have waned a little bit. And certainly towards the end of the year, the cryptos, backed off, and they've been trading real badly here, in January. So, that may have been a sign back then that things were changing. Of course, hindsight is always 2020, and as you're going through the battle and the bullets are flying, it's not always easy to see that, but it is something to point out that the generals kept moving forward. The troops kind of lagged a little bit. So what's going on now? I think that one of the significant things to consider is that the Fed is looking at raising rates. They've said they're going to look at four times, plus they're cutting back on their bond buying, which is a stimulus step, and really is a tightening in itself. They're doing that currently and looking to be raising rates later on. This is going to be within a backdrop of less growth than 2021. The fourth quarter 2021 GDP was up around 7%. We are not going to be there in 2022. I've seen forecasts of 3-4%, even 2%. So that's less growth and more headwinds in terms of higher interest rates and less Fed stimulus. So I think that's one of the things that the market's looking at in terms of are things getting better or worse? Well, they're kind of getting worse with less growth and inflation staying high. I don't think inflation reaches the levels of CPI that were reported in the fourth quarter, but the prices are going to stay high, and they're going to be an obstacle for the consumer. So you think these are the things that the markets are looking at. Certainly, as we look at COVID and the division within our country, and geopolitical stuff. And as today's news is all about Ukraine and what happens with that. I think those things are an influence, but I really do think that the markets are looking at Fed and raising rates into a slower growth landscape, and I think that's a big problem. I would encourage people to get more defensive in their investment stance, get hedged or get higher cash levels, or whatever it may be. And if I can help someone walk through that and think about that and answer questions, I'm happy to do it. That's what I'm doing for clients now, is trying to get more defensive and preserve capital like that. I think this could go on for a while, and it could get a lot worse. This, the selling in January, the Russell's down 20% from its peak in November, and the S&P is not down that much. I think it's down 10% or so from its peak earlier this month. So so there is some more room. Listen, I hope I'm wrong, but I think that's the way I'm looking at it, and I think that people should be careful and be watchful. So again, if I can help, please reach out to me. Glad to help, and also like to hear questions and suggestions and comments. So thank you for your time. We'll be back soon. Goodbye.